Hello there and welcome to Business Live. Now, the full deregulation of prices of petroleum products, which was expected to take effect this morning, is now likely to be implemented next month. Information picked up by Joy Business suggests the policy was expected to allow marketers and importers of petroleum products to set their own prices from today. However, delays in getting the necessary legal blessing from the Attorney General and challenges in securing favorable price quotes from importers forced regulators to move the date forward. Now, this is what we'll be talking about in Business Live today, and also we'll be looking at the stock and commodity market analysis. Let's take a break now. When you come back, we'll bring you more. And we're back. Now let's take a look at the news roundup for today before we go into the deregulation matters.
The full deregulation of prices of petroleum products, which was expected to take effect this morning, is now likely to be implemented next month. Information picked up by Joy Business suggests the policy was expected to allow marketers and importers of petroleum products to set their own prices from today. However, delays in getting the necessary legal blessing from the Attorney General and challenges in securing favorable price quotes from importers forced regulators to move the date forward. The Ministry of Finance has authorized the Comptroller and Accountant General's Department to suspend the salaries of employees who do not have social security numbers. The ministry, in a statement signed by the Chief Director, Major Retired M.S. Taras, said the salaries of the affected employees could only be restored after thorough investigations have been conducted. New transport fares are expected to be announced this week after the Ministry of Transport meets with the various transport unions on a proposed rate. Reports say the unions plan to make a case for an upward adjustment in transport fares to the ministry. The Minister of Transport, Jifa Ativo, meanwhile says the union would have to justify an upward adjustment before any approval. The European Union is to resume budget support disbursement to Ghana. The EU ambassador to Ghana, Mr. William Hanna, who announced this at a meeting with government officials in Accra on Friday, said the EU would release in total €161.38 million of budget support to government of Ghana in the coming weeks. According to a statement issued in Accra by the EU Commission, the support would focus on 4 major areas. President John Dramani Mahama has lauded an ongoing collaboration between Ghana Ports and Harbours Authority and Meridian Ports Services that would bring about total transformation at the Tema Port. He said government would continue to forge relationships that would bring mutual benefits and create numerous jobs for Ghanaian youth in the coming days. President Mahama gave the commendation when the two bodies called on him at the Flagstaff House to inform him of the new 1.8 billion cedi deal they have signed towards the expansion of the ports.
You're welcome back to Business Live. And the policy, which is the deregulation policy, is expected to allow marketers and importers of petroleum products to set their own prices from today. But there have been some delays in getting the necessary legal blessings from the Attorney General and challenges also in securing favorable price quotes from importers, which has forced the regulators to move the dates forward. Now, Joy News last week spoke to Deputy Finance Minister Mona Korte, who was optimistic that deregulation will bring some relief to Ghanaians. Take a listen.
And I think I believe, not even what I think, but I believe that it means that we'll now start paying realistic prices for fuel. Okay, and now we will truly understand our cost of business, and therefore it will help. It will help us by making us more efficient and being more optimal in our use of resources. And this way, we'll be able to bridge all these deficits that have piled up from years, where we've just subsidized and subsidized, meaning that we've been living in a fool's paradise. We've been pretending that our cost of production is actually where it has been, even though it's been subsidized by government. But now we'll know the true cost of production, will be able to price properly. There'll be the market forces will determine the pricing of these things, and we will become more efficient and optimal in the way that we produce and in the way that we work, which will inure to our own benefit in the medium to long term.
I cannot let you.
Now we have some analysts also talking, and former Volta River Authority VRA boss Dr. Charles Rekubrobe has linked government's recent deregulation of the petroleum sector to the $900 million IMF deal. And he has also been talking about the timelines for this particular policy. Let's take a listen to him.
It didn't, because the Minister of Petroleum acted very responsibly. You know, I didn't just write an opinion piece. I wrote to the minister saying, this is my view, and I've consulted my lawyer. And my lawyer thinks that's a very good case, that you are acting illegally. And to his credit, he said, I will investigate it and I'll come back to you. So it's actually, we should commend the minister for acting properly within the law, even though there's a huge problem and the so-called under-recovery, which, as I said, is in my mind illegal also, is creating a serious problem for government.
We have also been made to understand that the legal processes have not been
existing. The legal process was never announced before I took that action. Nobody ever talked about the legality or otherwise until I raised the red flag.
But last week, the stakeholders met and then they established the modalities and forwarded it to the Attorney General, for approval.
I don't want to get into semantics, but there was no intent to send it to the Attorney General for approval. I can assure you of that. Well, the issue is, I support regulation, but it must be done according to the laws of Ghana. Okay. In the pricing of petroleum products, there are certain social factors. For example, there's a fund called UPPF, which allows the uniform pricing. Now, if you go buy cement in Accra, or buy cement in Kumasi, or buy cement in Tamale, they're not the same price. But we've done social adjustments to make sure that petroleum pricing costs the same everywhere. Now, that is to ensure that the poorest people, or either in the north or the rural areas or wherever, are not, justly discriminated against. Because if I'm a petrol seller, the easiest thing is I'll sell plenty in Accra, and I'll be very happy to sell very little elsewhere. So these are social factors which have been built into all these pricing. So you need to, in a sense, re-examine them. How do you make social adjustments or cater for the social need for protection in a medium of competition? Now, in rushing all these things, these factors have not been taken into account fully, and therefore it was necessary, in a sense, to allow competition to happen. Without this, you see, the real problem we have now is that the running away of our foreign exchange, the inability to have a stable foreign exchange rate in a system where every component, about 90% of the components of the price is denoted in foreign exchange, means that if you are not careful, we will be having a weekly rise in petroleum products prices. And that may be the correct thing to do, but I would rather say that government should put the greater amount of energy on stabilizing the macroeconomic environment, especially the city. Because if you have a stable city, you can manage and control. But we have a situation where our currency was the worst performing one a year ago, and it's already lost 20 or 30% in the 5 months of this year. Then, you really, really, really should not even be pushing deregulation, because the end effect of deregulation, whether you have a uniform price or OMC setting their own price, the difference will be the same. Petrol prices will rise and rise and rise again.
In other words, the timing for you is bad.
No, I'm not saying the timing is bad.
Because you are saying that they should rather focus on stabilizing.
The timing is bad insofar as, if you know that the commodity is so dependent on a stable forex environment. So the reason for our CD collapsing is government living beyond its means. What I'm saying is that if you don't have a stable macroeconomic environment, even if you have uniform prices, you will still be forced to subsidize it because you don't want a complete pass-through of, for example, if oil prices were to return to $110 a barrel, export prices will have to probably double, whether it is uniform or non-uniform. So it is not the deregulation that is going to, in a sense, make it more competitive and make it better for the consumer. But the point I'm trying to make is that if we don't stabilize the CD, the effect for the consumer will be ever increasing prices, albeit some will increase less than others. But the effect will be ever increasing prices.
Okay. But I still want to pin you down. When should this thing be implemented? And is this timeline of July realistic at all? Is it feasible?
I think that let me give you my honest opinion, because you keep asking me when will it be done. I'm not the Minister of Energy. I'm not the advisor to the Minister of Energy. There are processes that can be gotten through. The issue of the foreign exchange losses can be resolved immediately, if indeed the legal position that I hold is proven to be correct. Because the special tax of almost 30 pesos or 30 cedis, I'm not sure, that the Ministry of Finance has imposed. If indeed my position is correct, that money, should be part of the calculation of ex-refinery, and that is only that which is surplus to that should go into a special tax, because already they are charging excise. So the windfall profit from the reduction in world oil prices must accrue to the consumer. And so the fact that it's been swept into a tax is wrong. That is my view. So that can be done immediately. And if that is done, indeed, there will probably be no more under recovery. And the financing operations of the BDCs will become stable. Okay, now they are owed so much money, most of their banks are even saying that we will not support you anymore. So that action can be done immediately. The legal process may take some time. And in fact, you need to review the existing law and cross-check it with your intention, and then you go to all the different places. Eventually, Parliament will have to look at it, and it will have to pass an amended LI. And so the processes, July 1, I don't think will happen. I mean, we don't. Here we are. We don't even have an electoral commissioner or chairman of electoral commission, and already Supreme Court is looking at 14th for preliminary. The wheels of justice, the law, grind very slowly. So my old view is that September will be a much better time, so far as we can stop the hemorrhaging or bleeding. Because if my position on the law is correct vis-a-vis the special tax, then immediately no more losses will be accrue to the BDCs, and they can come back from their coma and be able to operate, and therefore the effect of that will be there will be no shortage of petroleum products. As for the uniform pricing going to a liberalized regime, it may take a little bit of time in going up and down, and for them to get used to the idea that this is how we're going to run it. And I think all of that process My own estimation is that we'll be lucky to get away with September. But if we deal with the most important problem now, then the timing is not that crucial. The most important problem is to say that the BDCs are not bleeding to death. We've stopped the hemorrhage. We tied the tourniquet. Now let's move on.
Dr. Charles Reku will be there. We'll see what happens if indeed this policy will be implemented in September. We'll see. We'll get you updated in all the issues that come up with the deregulation policy. Now we are turning our attention to the stock market, and as usual, I have my analyst here with me, Bertha Tubiga, with the Gold Coast Fund Management, to do the analysis. How are you, Bertha?
I'm doing great. How are you too?
I'm well, by God's grace.
Okay, thank God for that.
Right. So, any good news? Looks like there's so many things happening in the economy, and
sure.
of course we see a reflection of that in the market.
On the stock market, yes, you are definitely right. Let me put it that way, because last week the market didn't go well as anticipated, or what we analysts expected from the market. Liquidity was very down in terms of volumes and values that were traded on the stock market. It went down more than 50% as compared to what we saw in the prior week. And aside that, we saw the major indices, that's the composite index and the financial stock index, also declining on their week open levels. And you know, the prior week we saw the financial stock index going down, but however, the composite index went up marginally. But this time around, we saw both indices going down. The value of the exchange, that's market capitalization, however, went up marginally by 36.83 million Ghana cedis. And the reason for that is that we saw more equities actually gaining than the losers, and also we saw ETI, which has a third market cap, highest market capitalization, also going up by a peswa. And you know, I always say on this platform that anytime we have a drop or a plus in some of these equities like ETI and the other big guys on the market, it actually affects the whole market as well. So with ETI going up by a peswa, we saw the market capitalization also going up by 36.83 million Ghana cedis. But when we look at the composite index and the financial stock index, I was not surprised when it went down, because EBG, which has been a consistent gainer on the market, actually lost some pesos. That was 2 pesos by the end of the week. It was only a one-day trading that it actually lost these pesos on its previous quote, and that actually also affected the major indices. SCB is still losing. Standard Chartered Bank actually lost about 1 CD last week, and that also had great effect on the market as well. We also saw some non-performing equities. We saw MLC, we saw Golden Star Resource also being part of the SPL, were the major losers on the market. So this didn't actually affect the worth of the Ghana Stock Exchange that much. That's why we saw that marginal decline. So it's so many things happening, and one major thing that is also driving or affecting the stock market is the rate at which our cedi is actually depreciating. I just heard that they should focus more on actually shoring up the value of the cedi than this deregulation that you're talking about.
I mean, that's the call of many analysts.
Yes,
really, because the cedi depreciation
so
affects
significant.
Everything.
With a daily depreciation rate, that's last week, based on the Gold Coast cedi index of 0.75%. It's alarming, and the rate at which investors or the general public are actually investing in hard currencies now, especially with the dollar, is also alarming. And when the country gets to that stage, then it creates panic. And when this happens, it affects not only the money market instruments, it also affects the stock market as well. And you know, it also affects foreign direct investors. Why do I say this? Because most of our investors on the Ghana Stock Exchange are foreign investors, and you have to pay these people in their currencies, and that is the dollar. That is what is mostly used to pay foreign investors. And if the cedi is actually losing so much value, so it means that you are going to get more cedis to actually pay them, these people. So it means that you still demand for more of these hard currencies, and when you demand for more of these currencies, then it means that the value of these currencies, our local currency, is going to continue to depreciate. And one other thing, last week I made mention, is that our imports actually affected. It's not only Ghana. Let me put it that way. It's not only Ghana. It cuts across many African countries. The Rwandan shilling, the Kenyan shilling, the South African rand. Well, that is quite stable as compared to what's happening to the Kenyan, the Uganda, and then the Ghana cedi. And actually the Ghana cedi is actually worse as compared to these other currencies. And that is having a very great impact on the stock market. If that should continue, then we should expect more declines on the stock market. Looking at the way financial equities are actually losing on the market, it's quite alarming, because we all know that the financial equities have been leading the stock market for the past years, like 2-3 years now, and let's say 2 years. So if it's going to happen this way, then it means that the government needs to do something about it, and we as individuals need to also change our taste of preference for foreign goods and then look at our locally manufactured products as well.
It's unfortunate because the stock market, when we started doing the analysis for this year,
you know, for the past,
so well.
You know, the beginning of the year we didn't see very good.
Yeah,
but at some point we saw this market gradually picking up. You know, we went into negative zones and we've moved out of the negative zones, and we are now recording positive year-to-date returns. And as of Friday, the CI closed at 4.35%, and the financial stock index closed at 7.56%, as compared to the week open where they were at 4.80 and then 7.99. So you can see that these indices also went down by 0.45% and 0.43% respectively. That's not good to hear.
Yeah, I know that the cedi, well, is a major cause of the fall or the the happenings on the markets, but what other causes?
Well, one other thing that we also need to look at, or that's actually affecting the market now, is the demand and supply. You realize that if we don't have bulk trades, or last time I told you what bulk trades are, if we don't have bulk or negotiated trades on the market, you realize that the volumes of shares that are traded day in, day out are actually reducing, as compared to somewhere in 2030, where the market was very vibrant, very strong. Equities closed the year returning more than 100% to investors. That's not what we are seeing this year. And you can see that investors' taste of or their sort of the influence to invest in the stock market is gradually going down because of that risk that is associated with this particular market. But I always say that the higher the risk, the higher the returns. So if you want to get
that's
more,
what people don't really understand. You
know, the stock market is not doing well right now. Last week it didn't do well, doesn't mean that it will not do well at all. And if the average returns on the market are not actually impressive as analysts expect or investors expect, should tell you that this is the time for you to even get in.
And that is what most people do not understand. You know, because one other thing, why would I risk to put my money in an investment that is so risky?
As individuals, we all have risk preferences. You understand? We have risk preferences. We have people that love to take risks, and we have risk averse people, those who don't want to take risks at all. So when you come as an investor, we need to know, we call something profiling. We need to know your profile. We need to know your risk level before we advise you to take this such investments. So if you come in and you're someone who really wants very good or very high returns, not within the short term, but last time I was telling you that you can actually make short-term returns on the stock market, especially with some of these equities that are doing well. Gold is doing so well. It's returned about 36% year to date, and that's marvelous. ETI has also returned more than 30% to investors, and that's also great. We have other equities that are actually returning positively.
So I see the incident didn't affect gold in any way.
No, it didn't affect gold. You know, gold is actually in its, let me say, good season. It's actually going up. It's still gaining. Last week it added 3 pesos, and this the prior week it added 3 pesos, and last week by the close of the week it added 18 pesos. You understand? So, and at 32.14% year to date, investors will be happy right now. If first half is not ended and you're making such returns on the market, then you should be happy that you are a shareholder of gold. And it's not only gold that's actually doing well. BOPP has been down for some time, but it's still part of our top 5 stock picks. Okay, Carl is also one of them. EBG, though it's lost, but we're looking at EBG, actually it has a daily return of about 0.18%. And when you look at their 2014 financials, they have very strong outlooks and then fundamentals, and their asset base is also excellent. So this equity, though it's lost like 2 pesos last week, it's one of the equities that we're still advising the investors, if you have that income or maybe some surplus income, you can get in and get some of these equities on the market. Like you asked me, aside the cedi's depreciation and then demand and supply, one other thing that also affects the market is the financials of these listed equities. I'll let's say it here. When your financials are very impressive, it reflects in the price movements of the equities on the market. But when your financials are not very good, then it puts investors away because they look at your bottom line, that is your profit margin. They look at the profits that you make. Based year on year, looking at your profits, they'll be able to tell whether you'll be able to pay them dividends in subsequent years or not. And when they look at your fundamentals or your financials and they realize that it is not impressive, then they look out for other equities as well. So this also affects the stock market's performance as well. And I want to give an example. There's this equity on the South African market, that's the Johannesburg Securities Exchange. It's a very big equity on the market, and somewhere 2 weeks ago, it was the investors or the general public got to know that the financials that was reported by this company was not actually real. Wow. You understand? And when they noticed that this was what was actually reported, it's actually dragged the market down because it is it is part of the top 40 index, one of the top 40 performing equities on the Johannesburg Securities Exchange. So this is how fundamentals or financials of listed equities actually affect the performance of these equities. And coming back to the Ghana Stock Exchange, you look at Unilever, you look at Farmwork. 2013, their 2014 results were not impressive. Then first quarter results, they released very impressive results, okay? And when after the results were released, you realize that FML, Unilever started recording some capital gains on their previous quotes. So this should tell you that though our market is not that efficient, but some of these information actually affects the market. And one other thing that also affects...
That's why it's interesting that after the incident, GOIL is still doing well.
It's still doing well. Oh, you mean about the fire?
Exactly.
Oh, that it's I wouldn't say it's a natural disaster, but it is something that was not expected. Okay. And that does not say that the company is not actually doing well. When you look at their dividend payments, you look at their payout ratios and all that, it is one of the equities that's actually doing well as compared to the other petroleum product, that is Total. GOIL is actually doing fabulously well than Total this year, and that's also pushing investors into it. And you know, we always tell investors that they should not look at or focus on one sector. They shouldn't look at only financials, but they should have a very good portfolio. They should have the right ingredients to make their soup or their dishes very delicious. So you don't want to go for financials, you're going for agro-processing, you're going for a bit of financials, you're going for the petroleum, you can go in for mining as well. And then blend this. When one sector is not doing well, the other one will hold it up.
You always give this advice.
So we're still advising investors to go in right now to into the stock market.
In spite of how bad,
not
marginally.
This is a marginal. It's you know, we don't look at just a short term. This is just a weekly update. That's what actually happened.
So we are hoping for the best this week.
Yeah.
So Monday when we
shouldn't be surprised. We shouldn't be surprised if we have less volumes of shares trading on the market, and then we should expect more equities to gain, as we saw last week. The equities actually that gained outweighed those that lost on their previous prices.
At least that's good.
Yeah, that's good.
Right.
And the value of the exchange actually went up. It's just that the indices is not that bad after all. Right. So investors can still go in right now. It is the best time to get into the market.
Thank you very much, Betha,
with
that analysis. And you've heard it all for yourself. It's still time for you to invest in the stock market if you haven't done so yet. And that will be all for Business Live today. My name is Abigail Adomakoenchi. Do catch a repeat of the show at 11:30 p.m. tonight. Up next is Focus on Africa. Do stay on.